Let's get the thoughts of Mario Singh, co-founder and CEO at FX1 Academy. He joins us now from Singapore. Mario, thanks for coming in today. What do you make then of the prospects for the euro in the short term? The bounce we're seeing today, is this just a short-term bounce because we've sorted out perhaps some of the tensions in the interbank lending markets, or is this more fundamental because the market understands, believes in the plan that is now being presented in Brussels?
Hi, and I see that as a short-term bounce. The markets were really in a huge sell-off the whole of last week. To these measures, at least when the markets opened, all the EU finance ministers, they only had one thing to say, and that was a show of solidarity in terms of having the whole 500 billion crisis package coming out. So as the markets start pricing all these things in, I do see the euro having a short-term bounce at least to about 130.55 before the whole momentum starts pushing it down again. Many investors...
What's going to push it down?
Well, I still feel because of the whole momentum that's pushing it down, there's many systemic risks. If I'm gonna call it systemic risk, we see how all the bond yield spreads of Portugal and Spain are at really high numbers. So while this may serve as a small contagion point, my call is that it will still be heading downwards.
Do you think the figure is enough? $1 trillion is enough? And are you surprised that they're reintroducing some of these swap lines? I mean, why is the situation in the eurozone that bad? Because all along they've been in denial, saying actually we're okay. Oh, actually we need money. No, we're okay. No, we're not.
The whole package, the whole $1 trillion, Chloe, I see that's a huge amount. That's massive. That really stamps their ground to tell the market that, hey, we are in solidarity position. We really want to help the whole thing. I just guess that I'm included in this part of the package in terms of investors and traders. We're just a little bit disappointed at how the EU took their time, or even Trichet, the ECB chief, they took their time in terms of containing this whole crisis, which could have stemmed even before it fell below 130. So it fell all the way to 125, which really caused a huge pandemonium in terms of the financial markets. Now they've got to do something. They're putting their bazooka of about $1 trillion worth of credit loans in terms of their swaps. So that's going to be good. The markets are just not really convinced. We saw how it went up to about 1% today, but it is my guess that it will still continue to head downwards.
Mario, and that call that it's going to head downwards, is that because we're back to economic fundamentals? I mean, many people suspect that European growth is going to be pretty weak for some time, especially now that the IMF is going to be possibly more involved in dictating austerity around the periphery of Europe. So is that the basis of your call, or do you have still more short-term concerns? Because if that is the basis of your call, the economic fundamentals, then that's possibly a good thing. We've made progress at least.
Well, that's in two parts. I agree with the topmost portion in terms of economic fundamentals. The Eurozone, which is all export-oriented as an economy, they do want to support a low euro price. In that sense, exports will start going upwards and all that. So that's going to be great for the whole Eurozone. At this point, systemic risks are very prevalent in Portugal, in Spain. We saw how bond yields are all at skyrocketing high levels. So traders are not convinced that such a measure is going to help. It's going to be a small band-aid, but I still feel that the wound is going to be a little bit more infected at this point.
You know, the Aussie dollar recovering that 90 level handle against the US dollar. We've got China data to look out for tomorrow. We also have the super tax, already Peabody reducing their proposal for MacArthur Coal. What is going to happen to one of the riskiest currencies, Aussie dollar?
Well, this whole week, the risk is returning in terms of the commodity currencies, in fact. The Kiwi, the Canadian dollar, and even Aussie dollar. All these three, I feel that they will be heading upwards this week. In terms of the sterling and the euro, my call is to stay out until at least we find some pricing in of the euro. And number two, more importantly, how Cameron and Clegg are going to start forming the coalition in terms of the Hang Parliament crisis. So for the sterling, I would be staying out at this point.
Our uncertainty is the big problem. So we appreciate your time. Thank you so much. Mario Singh, co-founder and CEO at FX1 Academy.